how does the UK spring budget impact expats? This is Park Sam, and I'm giving you a short after budget review here of the key benefits for expats that are living and working abroad. We talked in our preview show earlier, you can watch it at Living and Working Abroad on YouTube, how that a UK corporation tax is a great way to operate a personal service company, especially for expats, depending upon what your turnover is and how you want to operate. But any profits are taxed at a flat rate of 19%. So in the UK now, over £100,000 earnings, you're getting into, you're losing your personal allowances. Over 125, you get 45% tax, and it's over 40% tax over 50,000. So you can get a flat rate 19% tax. Dividends are taxed, and those rates are going up, and the allowances are coming down. But if you're an expat living and working abroad, you can draw unlimited income and pay 0% tax in various different countries. So it works as a great way of operating a company. And now also with UK companies, you've got 100% capital allowances on investments in the year that you're doing the work. So that's a great way forward for business. So for nomads, flexible workers working abroad, through a personal service company that's UK based, proactive experts in helping you minimise your tax break and avoiding high rate taxes abroad and in the UK. Lifetime allowances on pensions are changed. That's a big thing for expats. Now it's dressed up as an incentive to keep people working, and I understand that. But the bigger your pension is, the bigger your tax is. So if you put in more than £1 million in your pension, you can start building your income up. And again, that 45 tax rate and the 40% tax rate is there for you. By retiring abroad, you can enjoy a lower rate of tax on your pension. For example, with Cyprus, you've got a 5% flat rate on pensions for living and working abroad in Cyprus. So consider with your pension advisor how you could better use the pension rules to top up your pensions. And when you do take that pension, consider retiring abroad for lower tax. And have in mind, going back to the corporate tax route, you can get tax relief on money going into pensions. So if you've been holding back, you can put that back in again in the UK. And the other great thing is something that the UK didn't do. They didn't change the capital gains tax rules. So if you've got capital assets in the company, investments, shares, cryptocurrencies, or investments other than property that are sold while you're expat, there is no UK capital gains tax on that. It's deferred potentially for 5 years with no tax being paid. So expats have still got that capital gains relief. So no dividend tax, no capital gains tax, lifetime allowances increase. You can contribute more to pensions, plus capital expenses on businesses are improved. So there's great opportunities going forward for expats. So if you're an expat living and working abroad, or working as a nomad or working remotely, contact us at proactpartnership.com.